Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of Tesla analysis. Today we will go over end of year Tesla stock price possibilities for 2021, as well as quickly reviewing past year-end stock price for Tesla from 2011 to 2020. If you are a shareholder in Tesla, you should be very proud that you have held through a lot of volatility. If you are a trader in Tesla, let's take a look at charts to also see what opportunities would lie in the next couple of weeks, especially as we head into year end and Q4 delivery result. If you're new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. Thank you very much, and let's get right into it. Here is a copy of Dave Leaf's tweet on December 17th on the stock price from 2011 to December 17, 2021. The jump from 2019 to 2020 is pretty impressive as the jump from 2019 to 2020 was pretty impressive, as we all already know. This baked into the 5-to-1 stock splits that was announced around August 11th of 2020 that also created a catalyst for the stock to rise further, in addition to an outstanding year of delivery performance. And on top of that, Tesla was being added to the S&P 500. So as of Friday, Tesla was trading at $932 with an all-time high of $1,243. Looking at the financial history in Tesla on an annual basis on Hypercharts, this makes sense why Tesla stock went hyperbolic in 2020 and will continue to do so for years to come. So if you look at this chart, the number of vehicles delivered in 2020 was significant. Notably, the number of vehicles delivered for Model Y just started in 2020, and Model Y is projected to be the best-selling vehicle of any kind. So if 2020, the year the Tesla stock exploded, Model Y only started to sell about 92,000 units here. You can only imagine the years to come when Tesla continued to increase its Model Y delivery and performance. If you look at revenue segments, this is a beautiful chart, continued to beat expectation and top previous record. 2020, Tesla started to turn positive net income. And if you look at operating expenses, while revenue went up gradually, operating expenses have been pretty much stable. And this is the recipe for increasing margin for years to come. And we know that in 2021, with the ramp up of Tesla Giga Berlin and Giga Austin, the depreciation might start to kick up a little bit, but the real depreciation expense will probably kick in 2022. So we expect an increase in 2022 depreciation expense here. You can see that Tesla free cash flow, the blue line over here, substantially increased compared to the years before. It used to have negative cash flow for many years. And Tesla's amount of cash is stacking up. Tesla has gone through production hell. It has gotten to volume production at this point, and it is now has a clear path to advance. So overall, I think we are seeing a growth story that plays out right in front of our eyes. This is the company that will transform the world, that will transform the way transportation is being conducted around the world, and it will lead us to a more sustainable energy future. Of course, as a Tesla shareholder and as the Tesla bull, this is news for celebration. But let's get into chart analysis together with the upcoming catalyst that could affect the stock price. As far as trading, I think next week, the week of December 20th and the week of December 27th would be opportunity for Tesla stock to rise. However, we have to remember that Elon Musk still has more shares to sell. So Elon has been selling more than 50% of his shares of the initial 10% that he pledged to sell. As of December 16, he has more than 13 million shares. As of December 16, he has sold over 10 million shares, and Dave Lee's also estimated in the next couple of weeks, he would be selling another 3 million shares, give or take, bringing the total number of shares sold up to 15.7 million. This would push him well above the 50% sold and leaving about 2 to 3 million shares left to complete the 10% that he had initially pledged to sell. I do expect that Tesla stock price to be volatile in the next 2 weeks, including some red days because of share selling. So I expect the magnitude of any impact to the stock price due to Elon selling shares is very minimal in the next couple of weeks. Here's the daily chart for Tesla. In my video on Friday, I had indicated that if Tesla closed the week above $950, which is right around here, that would be a much better reversing candle. Right now, as it ended the week, it was at $932. So I do think that this is a very weak candle and it's not necessarily a confirmation of a bounce, but given the fact that Tesla filled the gap that was created back in October, I think it has reason to spike further. But before we look at the upside, let's also look at the downside for preparation purposes. Right now, Tesla has a strong support at $853. There is a mini gap from $853, give or take, down to $843. It could easily fill that gap, that is about $80 from here, and then go back up. Quite frankly, Tesla 200 days SMA at $764 is still higher than Tesla end of the year last year stock price. So if anything, if Tesla retraced back to 200 days SMA, it is still better and it still had a positive return year over year as far as stock price goes. As far as the business goes, you guys know we are well ahead of the competition. And Tesla is definitely have a lot of room to grow. So the stock price in the immediate near term does not matter as much in my mind. Now, the volume on Friday was 127%, which was significant. The volume was about 40% buy volume and 60% sell volume. But at the same time, I think that the candle here shows progress. It's not quite a complete rejection. It does try to get to above 950 and it failed to do so. So we have to look at Monday to see what the possibilities would be. I also note that there is an RSI divergence here. So the RSI divergence started right around the 13th of December, went all the way down to the 17th of December. So you can see RSI here moving sideways while the stock is moving down. So this is just a matter of time before Tesla reversed. We don't know when, but I'm guessing that if Tesla tipped down to an irrational selling point, let's say below $909, it would start getting buyers and then it would start reversing. So I do hope for one last bearish leg so that I can make an entry for a lead call option. But if I don't get that, then I do understand that we missed the bottom at 909. Now I'm going to be looking for a confirmation of a reversal, which means that Tesla should end the day on Monday above 960 or right around 960 for that confirmation to happen. Here's the half an hour chart for Tesla. You can see the trading range for Monday. The upper pivot point is $959, middle pivot point $934, which should be right around where it ended on Friday, and the bottom pivot point is $883. So ladies and gentlemen, if Tesla, for whatever reason, touched the bottom pivot point on Monday, that would be my entry point to purchase a leap call option, or at least a few months out in expiration. My strike price would be right around $1,050 because I do think that Tesla will first retest 1026, which is 50-day SMA, and then if it holds 1,026, then it will get to $1,078. So that's my immediate projection on the upside, but a lot of conditions have to happen for Tesla to move to the upside. We see the divergence there. We know that it's just a matter of time before reversal, and I'm guessing that reversal will come sooner rather than later. It is also possible that if the market cooperates due to completion of tax loss harvesting and the macroeconomics environment and so on and so forth, you can easily see Tesla gaps up on Monday. But if Tesla does gap up above this pivot point here at $958, then I think that it might not last and it might eventually go back down to retest either the bottom end of the gap here or somewhere around the previous close, which is right around 932. So I will not enter a call option if Tesla gaps up. I will not FOMO into the trade. I have to wait for an optimal point, which is where Tesla retrace back to either at open or better yet below $900. So my play I'm looking at is for Tesla to move below $900 and potentially touch the pivot point of $883 on Monday. So coupled with the fact that we anticipate that the last 2 weeks of December could be a good catalyst for Tesla with running leading into Q4 delivery result, then I think that a retracement on Monday or anytime in the next couple of days could be a blessing for traders like us. It could also be creating a good opportunity for entry points for shareholders, because let's face it, the moment the complete result for 2021 came out and we see that Tesla exceeds over 900,000 of vehicles delivered in 2021, I think that the world is going to have a reality dose, including the Tesla Q. They will start realizing Tesla is a monster and we better not short Tesla. There will be a big short squeeze coming up if everybody have that newfound realization about Tesla. I know for us Tesla bulls, this should not come as a surprise, but there are a lot of Tesla Qs and bears out there that will continue to bet against Tesla. So you will see a healthy amount of short squeeze coming up in the next few weeks, especially right after Tesla announces delivery result. So with that in mind, if Tesla retraces for whatever reason on Monday, and I'm looking at $1,050 in strike price, expiration I'm setting at January 14. I want to catch not only the run in December, but potentially after Tesla announces delivery result. Just as a matter of principle and buying myself more time doesn't mean that I'm going to keep it until January 14, right? But I want to buy some time, and my rationale for January 14 is just that. $1,050 strike. January 14 is currently at 2,300 right now. If Tesla retraces Monday morning, this number will go down, right? If it gets to $1,700, you're having about 4 weeks. Strike price of $10.50, which is well within the reach for Tesla once it surpassed 50 days SMA. And it also contains the Q4 delivery result on January 3rd or so. So I think this is a very good price and a very good risk versus reward ratio. If you can afford a little bit more in premium, I would even do something further out to April to potentially capture the January Q4 financial or earnings result. At that point, I'd be looking at about $1,150. Right now, it's around $6,000 or $6,100. That will substantially change once again if Tesla goes back to below $900. That will be a good opportunity to enter this call option as well. I only look at call option at this point because I do think that Tesla is more likely to move up with the macroeconomics environment, with the upcoming catalyst, with the Q4 delivery and financial result, and with the fact that Elon Musk is winding down in selling shares. Of course, anything can happen in the next couple of days, and I will continue to update you guys, but that is my trajectory right now. One thing I need to caution all of us bulls out there is that the weekly chart does not look extremely bullish. It did fill the gap, the weekly gap at 909. So it has every reason to bounce now, but it needs to really bounce to above 950 and 960 for me to feel comfortable. So that's what I'm looking for in the next couple of days. If Tesla ends the week right at $1,026, which is currently 50 days SMA, that would be a candle that go from about midpoint of this gap here all the way up to this white dotted line here, and that would be a green candle that looks like bullish engulfing, and that would be a great sign of confirmation for reversal. So of course you can always wait until Tesla weekly confirms the reversal to enter a call option. I do think at that point premium would be much higher, but that of course would be safer than trying to find reversal points at this point. After all, the weekly chart is not extremely bullish. The RSI is not completely oversold yet. So it is entirely possible that we won't see a reversal. I do think, though, that is a much smaller probability than the probability of reversal. That's just my opinion. So for those of you that are also interested in Rivian stock, here's a quick chart analysis for Rivian. Rivian went public back in November. It continued to move up for about 4 consecutive days and then start moving back down. On Friday, the lowest point of Rivian was about $93 with Q3 2021 financial result. Without going to the details on the financial results, I wanted to share that this is a very bearish looking chart for Rivian. It looks like a descending triangle. And for the subsequent weeks or days, I expect Rivian continue to move sideways and then down a little further. I do believe that Meet Kevin made a really good analysis on Rivian. The entry point, in his opinion, would be around $70 or so, and I tend to agree with that. I'll put the link down below if you guys are interested. Meet Kevin also did a fantastic job breaking down the earnings report. So for those of you who are interested in owning Rivian stock and deciding what is a good entry point for Rivian stock, you can take a look at Meet Kevin's videos. I will put a link down below. In my mind, Rivian is a potential good investment, but Rivian has a lot to do to prove itself. Remember production hell in Tesla. It will be the case for Rivian for the next few months, and Rivian has to do a good job managing cash flow because otherwise bankruptcy is on the table. That being said, Rivian is a company with a lot of ambition. It seems to have a lot of talent. I've been looking at Rivian website recruiting. I think it is doing a fantastic job ramping up internally the infrastructure as well as the manufacturing facility for volume production. So it is a matter of execution at this point. Once again, it's not easy, but it can be done. And right now, as we stand, we don't know if Rivian has a excellent chance of success or just a mediocre chance of success. Fundamental aside, if you look at Rivian stock, this is a bullish hammer, but it is occurring after a major gap down. So the gap was from $108 to $99. So this is not necessarily a bullish candle. So in my opinion, Rivian will continue to move sideways and then fall a little further down. Keep in mind that we have RSI at oversold territory now, so it might experience a little bit of a spike, possibly even filling this gap and return back to 108 before falling down further. My personal opinion is that Rivian short term would move sideways first, and then it will have to figure out what it wants to do. If the macroeconomics environment is really good and everybody enjoys buying like crazy, then it could potentially go up, but I don't think so. I think with interest rate rising for the next year, I think people are trying to reevaluate where they want to put their money, right? And Rivian might not be the first that come to mind. They would likely prefer companies like Apple, Google, Facebook, the ones that have a lot of cash on their hands and a lot of financial strength. from a technical standpoint, once again, this is a descending triangle. It looks very bearish, and I expect Rivian to continue to move down for the next few weeks, if not months. Eventually, it will reverse, and eventually it could snap back up for a short-term trade. If you want to invest in Rivian, I think anytime Rivian turns red is always an opportunity to buy. Arguably, you see more downside in the short term, but if Rivian executes well, it can eventually go back up. And an investment from, let's say, $90 up to back to all-time high at $180 is actually a very, very good return. As a double 100% return, right? So there's potential rewards in there, but only if you are prepared to hold on to the stock in the longer term and potentially endure much more downside in the short term. So this is it for this video. I hope you find the information helpful. I hope that you enjoy the analysis on Rivian and Tesla. Comment down below if you like my analysis on Rivian, because I do not know how many of you guys of my audience are interested in Rivian. I am interested in Rivian partially because Rivian is a competitor of Tesla. The other part is that Rivian has really good design, and I've talked to a few people who are also interested in buying Rivians, and quite a few of my friends have already put their deposit in Rivian. Obviously, it hurts me personally that they're not choosing to go with Tesla, but I see a trend in Rivian as well, and so I want to monitor the stock. So I hope that you guys enjoy it. If not, let me know, and perhaps I could eliminate it from my video in the future. Regardless, thank you very much for paying attention thus far. Until the next video, bye.